Yes, Cheryl, a lot of block deals, and you're pointing out that they have been beautifully absorbed by domestic and foreign investors. But let's put this in perspective. Why we are seeing what we are seeing, so much of offloading of stake. And for that, independent market expert Mahantesh Sabarad is with us. Mahantesh, explain this to us. If you see this common thread, as it were, as to why so many companies and the promoters are offloading stake.
I think a lot of the reason is underlyingly linked to growth capital. Most of the promoters require growth capital to be pumped in similar businesses or essentially reducing debt capital so that the headroom available for absorbing more debt gives them for further growth capital ahead. Uh, we have known that most of these companies have been in a capex sort of mode, and therefore they are in a spree that says they need to raise more capital. Now there are two methods to do that. One is obviously raise fresh capital, and the other is to actually offload some stake and pump back into a sister concern associate company or the parent company, as the case may be. Here you have a market which has risen up quite substantially high. There is this catch 22 situation. If you go for fresh capital infusion, you will not necessarily attract investors because the valuation becomes too high. But then, therefore, when the valuation is high, it is better to offload some portion of your stake and reinvest in through other mechanism through into your sister concern. So probably that is what we are seeing. Capex is the seems to be the driving theme for most of these promoter exits, and the other theme that you can potentially see is that the valuations for raising fresh capital is becoming a little too high.
As of now, is this something that companies are working towards as well? Because that's one of the reasons why companies offload stake, isn't it?
Yeah, they do offload stakes. But there are very few instances where we find that the promoters offload stakes simply because they no longer want to be in the business. They are getting into a retirement kind of mode. One of the primary stake offloaders in the recent past has actually been the government itself, because the government was going pursuing the divestment program. Earlier, we used to see the government companies would divest it through the mechanism of an OFS route. Later on, you had this concept of the PSU index funds offloading through that. And now you also have a mechanism wherein the public sector companies are in a way offloading by doing some kind of mergers. PSU
Correct.
banks did a merger, if you remember,
Correct.
and
Yes.
to bring the
So there
overall
is a bit of
either the
consolidation as well, Mahantesh. But when you talk about the
yes.
absorption, when this stake is offloaded, like my colleague was pointing out, domestic and foreign investors are participating in these block deals that are taking place. What do these stake sales do for the markets?
So generally, the stake sale, if is for growth capital, it will make keep the market a little more excited, because you will see that equity capital come back into the markets, into some other companies, and overall expand the base. And therefore, the absorption becomes very easy. So for the market at this juncture, when there is the underlying theme of a capex and reinvestment happening into the markets, it does signify the growing confidence of the promoters into their businesses or related entities, and therefore overall expansion in the market.
We expect valuations to become that much more realistic at the end of this offloading stake cycle, as it were, because you did touch upon the fact that the offloading happens because you've got peak valuations. But after that, what happens to valuations? Because we are talking about how stretched they are, at least in some pockets.
Yes, they are indeed stretched in certain pockets, and therefore, while we will see an initial dip in terms of the stocks going down because of the heavy selling pressure that we see, but then when the overall absorption really happens, and if the capital comes back into the market, it could be into related entities, then the overall valuation starts rising up once again. mind you, this capital, when reinvested, will also mean better earnings ahead. Therefore, by nature, when you have uh, equity stake dilution through the promoters coming re-entering the market into some other form, actually enhancing the EPS of the overall market, then you will see that the valuations therefore start to temper down. So you have one pocket, the overstretched valuation zone, actually withdrawing capital and putting it into the unstressed or understretched valuation zone to keep the market stable.
Together, Mahantesh, you're pointing out that this is a good sign for the markets and in terms of the companies if it leads to higher capex, which seems to be the indication. Of course, the government with public sector units has been on a divestment cycle. Whether or not they can reach the targets, that has been in question. But we're seeing the private sector go that much further when it comes to offloading stake, and if it leads to a higher capex, it's something the markets would cheer. That's the gist of it. Mahantesh Sabarad, always a pleasure getting in your perspective. Thank you so much for joining us on this edition of Business at 9.